Will you ever get tired of hearing that gold has reached yet another all-time high? Well, you might want to get used to it because it's exactly what's happening. Let's discuss today's movement in gold price and silver. It is disappointing a little bit today, but at least it's above $34 an ounce. We'll talk about both metals and why they have risen yet again as we explore. The rise of gold, it is starting to make waves for sure, especially with the advent of new legislation that I talked about in a previous video, that there could be a revaluation to $3,000 gold or market price. And of course, if that was done today and signed into law at $3,000 an ounce, well, it would be undervalued right now by $34.50. That's right, gold is up $32.70 today, up over 1% to $3,034.50 after a high of $3,039.50. Over at the futures market, it is about $3,050. It's crazy. Now, I made a video recently predicting that we could see $3,200 gold soon. And I think that is still quite possible, especially after the move we saw today. And what is behind this? Well, we have a temporary, at least a cursory agreement that there will be a 30-day ceasefire in Ukraine. However, another ceasefire has indeed expired because of some violations by Hamas. And so Israel is now sending bombs back into Hamas. And so that's what is behind it, geopolitical uncertainty and uncertainty regarding tariffs as well. Let's get into what's going on by Barron's.com with a piece there about what's happening. But if you're ever in the need for precious metals, and of course in this market I can understand why you might be nervous in buying, but yes indeed, it's always good to look for the best deals you can. Premiums are coming down, and some of the lowest premiums in the industry right now are by channel sponsor Summit Metals. So check them out for your gold and silver needs. See if they have what you're looking for at the best price. I think you might be surprised. SummitMetals.com. Forget a silver lining, and that's for sure, because silver did not perform nearly as well as gold today. It's only up just a third of a percentage point, up 11 cents, but at least it's above $34 an ounce again. But far underperforming gold today. Gold has been one of the biggest winners during the stock market sell-off, and it shouldn't change as long as uncertainty reigns. Fear is driving the markets right now. And we see that some of the exchange-traded funds have bumped up to against fresh all-time highs in the gold shares futures market, as after climbing more than 5% over the past 6 days. This puts GLD up more than 6% this month, more than 15% since the start of the year. The precious metals price itself hit a fresh record today. Gold is one of the few assets providing a consistently defensive posture during recent spate of market volatility, according to Enterprise Chief Market Strategist Anthony Saglamane. And this is something we're going to continue to likely see. The pattern continues. This, I think, is something very different than what we saw in 2011 and in 1980. In fact, if we go up a couple of $100 from where we're at right now, it will be at an all-time high adjusted for inflation. Gold's setup is nearly perfect at the moment, along with the flight to safety amid U.S. market declines, fueled by tariff uncertainty, recession fears, and previously high equity valuations. Geopolitics certainly aren't helping either, with the previous ceasefire between Hamas and Israel abruptly ended after the IDF launched a fresh attack in Gaza overnight, with more than 400 dead now, including 3 Hamas leaders, according to reports. Gold and oil prices are firming up in the wake of the sudden end of the Israel-Hamas truce and the IDF conducting airstrikes overnight. And so this is having an impact, and silver, platinum, and palladium are both tagging along. Rhodium, too, although palladium right now is actually down $3. Platinum went up, too. As investors' worries span from the Middle East to the Beltway with little end in sight, market watchers see further gains to come for the metal and have been boosting their price targets. UBS Global Wealth Management Chief Investment Officer of the American Salita Marsali raised her target to $3,200 an ounce by June and through next March after gold broke through the firm's previous $3,000 target. Sounds familiar. I made that prediction too, $3,200 gold, which was an about face for me. I thought maybe once we hit $3,000, it would be strong resistance and we'd see it come back down. That could still happen. We're only a day into spurring past $33,000 gold. And by the way, the low for today did dip down briefly below $3,000 an ounce. So I could still be wrong here in my shift. She expects caution to remain prevailing sentiment among investors supporting gold demand. Gold remains a key portfolio hedge against near-term uncertainty, but also against episodic bouts of risk aversion further out. DataTrek Research co-founder Nicholas Kolas is even more upbeat. Although gold is up some 50% since he became bullish in mid-2023, he says there's more room for a run, arguing it can reach $3,500 over the next year. Kolas notes that the ratio of the S&P 500 to gold prices is 1.9, meaning that it's how many ounces of the precious metal it would take to buy the index. This isn't far above the long-term average of 1.6 times, dating back 50 years. Using that long-term average as a fair value for gold suggests that the metal has some catching up to do with the index. Kolas writes that it can trade at $3,547, some 18% above where it stands today, which would be an all-time high, plus some adjusted for inflation. Another way to look at that ratio is the gold prices could stand pat and the S&P 500 could fall another 15% to around 4,800, which Kolas thinks the former is much more likely. While gold has rallied substantially recently, it isn't in uncharted territories. Kola notes that gold's appreciation is nothing like the 1970s rush, and there is a precedent for the continued rally. Gold can outperform stocks over the next year because incremental demand from non-U.S. central banks will continue to be strong, and other buyers will see gold as a hedge against geopolitical uncertainty. Indeed, that is for sure. And by the way, I think that is something that we need to consider here is that we may see more buyers come in even at these prices. They may be big-time buyers, whales they call them. We're going to be a lot more whales coming into play and be able to afford gold these days. So what's happening here in the markets otherwise? Well, we can see that as silver and gold are up, most of the other commodities are down. Including copper, nickel, aluminum, zinc, lead, and even uranium. Not down by a whole lot, but down nonetheless. Crude oil is also down to $66.85 a barrel. But what we're watching here is the stock market, and it is down. Dow Jones Industrial Average is down over 260 points. NASDAQ down over 300 points. The S&P 500 down 60 points, and the dollar index is down almost a quarter of a percentage point to 103.25. And we watch the dollar index because it gives us a gauge in terms of what the gold and silver are going to do, although there are times, and I think today is one of those days where it doesn't really matter what the dollar index is. Gold and silver are going to do what they're going to do because that's not down a whole lot for sure. Bitcoin is also down. And it's down to $82,000 a Bitcoin. That's a negative 2.4% drop, even with this Bitcoin strategic reserve being introduced as legislation by Senator Loomis, as I mentioned in my video earlier today. But there you have it. What a wild ride we're seeing for the gold right now. It is something. And for those of you who have been wondering about the benefits of holding, well, this is an example of how it plays out. The gold that you see here was bought a while ago when gold was a lot cheaper. And you know what? Silver's not doing too shabby either, but it does frustrate many of us, myself included. I just think that the gold to silver ratio is sitting where it is right now, which is at 89.5. That's just ludicrous. It's insane. But that is essentially setting itself up to be the new normal for the gold market, or for the silver market, because there's so much involved in it. It's getting pushed and pulled in a number of different directions, and we're seeing that play out here. But nonetheless, it's up and it's continuing to rise. And at $34.06 right now, we can't be too disappointed. It did get to a low of $33.75 earlier in the day, and as high as $34.34, which was the high that it reached today. So now many people feel that based off of technical analysis and other factors that silver is about to just explode way past gold in terms of performance. I don't rule that possibility out. However, do not be too terribly disappointed in silver if that does not happen to be the case. Silver will still preserve your wealth against inflation, even if it doesn't have the same performance as gold does. We live in a different world these days, and it's a different world now than it was even 10 years ago, where the gold to silver ratio normal is something that we need to readjust ourselves to as to what that's going to be. Right now, I feel that gold to silver ratio normal is around probably between 70 and 75 to 1, maybe even a little bit more than that, as being fairly conservative, where many of us, where it was before was around 60 to 1 or 55 to 1. I think those days are long gone. And so a big bull run where we could see it, catch up to gold and surpass gold in terms of the race, in terms of percentage gains, I very well could see that narrowing hit somewhere in that range, but I don't think it's going to go past it. In other words, between 55 and 60. That's in a bull run. The new normal for the gold to silver ratio is something that we're going to all need to adjust to. But it does not take away from silver as a precious metal to preserve our wealth. Not in any way, shape, or form. It's just a new reality we got to live with. But otherwise, I hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.